Hi, I want to talk to you today about my friends at Bitwise and why they're the best crypto asset manager out there. I've talked on the show often about how crypto is reshaping everything from finance, portfolios, and even macro. Everything's ramping up. We've got tailwinds in DC, interest from TradFi, and growing optimism. But smart investors see all of this and focus on the how. What's the savviest way to seize this moment? And that's why so many investors I know are working with Bitwise today. They've been all in on crypto since 2017. They're OGs. They've got more than 30 products to help investors like you get access to whatever they need or want. They've got a team of more than 100 across the US and Europe, and they have over 10 billion in client assets. You know, a lot of people know Bitwise for their ETFs, how they manage the world's largest crypto index funds and the wide range of crypto ETFs they have. But not as many people realize, Bitwise manages private alpha strategies too, and has SMAs for large investors, and is one of the largest institutional Ethereum staking providers. They really do everything. These guys are true OGs in the space, and they're good friends of mine too. So please go and check out Bitwise. They're really excellent. Go to bitwiseinvestments.com and see all that they've got to offer. That's bitwiseinvestments.com, or just email them at james@bitwiseinvestments.com and let them know that Raoul sent you. Anyway, there's a million ways to access crypto. Explore how you can access it best with Bitwise. And remember, carefully consider the extreme risk associated with crypto before investing. Anyway, thanks so much.
Hi everyone, sorry to interrupt, but this is the cheesy podcast bit that gets on everyone's nerves, but it's really important to me. Please, if you can like the channel and also subscribe, it helps me a lot to get the best guests in the world for you guys. So click like and subscribe. Appreciate it. Thanks.
Hi, I'm Raoul Pal, and welcome to my show, The Journeyman, where I travel to that nexus of understanding between macro, crypto, and the exponential age of technology. Sometimes I speak to people just purely about the macro, other times purely about crypto, and other times purely about the exponential age of technology. And sometimes it comes all together. And in this case, it's with a dear friend of mine, Alex Gurevich, a hedge fund manager who's got 20 or 30 years experience doing this. And he's a great macro trader. Many of you have seen on realvision in the past. But also, what I love about Alex, he's always a big picture thinker into the future, because he's a science fiction author and reader and really understood a lot about AI and the technology revolution well before I did. It's because it's how his brain is wired. And I want to see how it all comes together for him. Things like the economic singularity. What does it mean? Where is AI going? But also, let's get to the nuts and bolts of the macro. How do we make some money? Both in the near term out in the future. So anyway, I know it's going to be an amazing conversation, and I know you're going to love it. So let's sit down with Alex Gurevich.
Join me, Raoul Pal, as I go on a journey of discovery through the macro, crypto, and exponential age landscapes. In The Journeyman, I talk to the smartest people in the world so we can all become smarter together.
So, Alex Gurevich, fantastic to see you back again. It's been far too long.
Yes, definitely far too long, but I'm very happy to have this conversation after a long break. There's been definitely a few things happened in the markets between our last conversation and this one. Let's put it like this.
So I want to do two things with you. One is kind of understand where your macro thinking is now. And then I want to have a conversation with you a little bit about the future, because, you're very thoughtful about some of this stuff. So we'll talk about that. But let's first just give your background, just a quick background. Most people know you by now, but just a quick bit of background, what you do now as well. And then we'll dig into your macro framework.
So I'm based in the Bay Area. I run a hedge fund, global macro hedge fund called Honte Investments. In terms of my background, I have a PhD in mathematics, and then I went to work on Wall Street. That was in 97. So it's now quite a few years for me in this market. It's actually kind of interesting. When we first started talking, it was 2015, and I was already considered to be a fairly experienced person by then.
Now we're just old and gray, Alex.
Like that was like 10 years later. Like 10 years ago, I was already a veteran.
I know. I mean, I've been doing this since 1990 now. It's ridiculous.
Yeah. Well, you look good for having done it since 1990. Let's put it like this.
Thank you. So listen, how are you thinking about the world these days? How are you thinking about the macro, where we are, where we're going over the next year or so.
Hi, Raoul here. Listen, I think we've got until 2030 before the economic singularity arrives. Now, it might not be the exact date, but it's around then. So we have about 6 years to figure out how to unfuck our future. I've put together a report to help you called Prepare for 2030. It's going to help you take the first steps in that journey to make sure you're secure past 2030. So just click on the link below and start your journey now.
Well, it is interesting that you mentioned that we're going to go later into this future thing, right? And we will go into more details, but I feel like, first of all, to think about anything right now in the world, I do want to start with a little bit of a big picture.
Yes, please.
And what I delineated for ourselves, there are like 5 different processes right now that you need to look at. And usually it's 2 or 3. Now there is like 5. So it's a little more complex environment than usual. And not that I'm not a fan of saying this is a difficult market. Or this is an interesting market. All markets are difficult and interesting. They're difficult when you get them wrong and easy when you get them right. So first of all, just remember, whatever happens to the market, buy low, sell high still works.
Yeah, very true.
Right? So that's the first thing we should remember as investors, right? But so, however, to understand what's going on now, this is the 5 processes that I kind of feel that I have to look at. And each of them has always a push. Each of those 5 processes, any process, had a push-pull of those. The more they exchange, the more they stay the same. And this time is different. Whenever you review anything, you always have this like that idiosyncrasy of the current environment versus the historical patterns repeat over and over again.
Yeah.
And the first process that you really need to look at, forget about everything that's going on in the world. There's a cycle. There's a business cycle. We're in a cycle. We had deflationary shock in 2020, followed by very easy policy, which led to inflationary overheating. Granted, more overheating than I anticipated, but inflation definitely more than many people anticipated, but I was probably on the more wrong side than others in terms of, in some ways, maybe yes, in some way no. Like I was kind of right in the fact that it will be somewhat transitory, but I wasn't right on the cycle of the scope of inflationary overheat, right? And now we're going to disinflationary cycle. Real rates have gone up with a very large lag, but we're seeing some slowdown in the economy, some gradual erosion in various economic factors, and slowing down on inflation. Again, not on the schedule I would have told you 5 years ago, but honestly, a year or 2 off in macro, it's not such a big error margin.
No, exactly.
So it's kind of happening. It's a big margin in terms of P&L, but it's not so much like, oh, the whole paradigm has to change because something is happening a year later than we thought it would, right? So we're basically going through a cycle, and in a cycle, we can expect weaker stock market performance that we're seeing until liquidity, kind of like somewhat tighter liquidity, until the central bank will start adding liquidity, which they have not yet really truly started adding liquidity. Eventually, they will. So you expect central bank to drag their feet, then start adding liquidity, then add liquidity till it becomes excessive. This is kind of always happens. They always don't have enough liquidity, then they add liquidity, and at some point they overdo adding liquidity. It's unavoidable. No matter how hawkish they're now, how stubborn they will be, because of the lagging nature of all the indicators, they will eventually add liquidity, and eventually they will add too much.
And that's always been your thesis, and it's really been a very simple thesis, which is there's at some points when everybody wants money and there's no money, and the other points there's eventually too much money, and you've added too much liquidity, and that cycle seems to repeat and repeat and repeat.
Yeah, and that pendulum, I think, is just going to keep, and this is the pendulum that is going to keep swinging, in my opinion, right? And then you expect all the things. You expect like interest rates at some point go back to zero, rebound on stock market after significant slump, rebound on asset prices, all the whole shebang that we usually see, right? All the trades that go worse in recession, depending on exact situations, mild or stronger recession. I'm inclined to think it will be strong this time because the cycle is so delayed. So in recession, I would expect recession to be very deep. And because real rates allow to stay very long, which means that real rates will swing pretty far the other way. We'll get negative real rates again. Probably zero bound will be tested again. People. So that is one process, right? The second process is the process which is somewhat shifting fiscal environment, the environment of fiscal dominance that many people pointed out, that just governments started to create inflation, not so much by through monetary policy, but through fiscal policy. And it seems to be not reversible. And even if you ask, there might be some push-pull on the fiscal policy. There's a fiscal expansion happening in Europe. And we probably moving, and there's a theory, which I don't necessarily subscribe to, that we might be moving to permanently high inflation environment, possibly permanently higher interest rates, more like not permanently, but semi-permanently, something like 70s, as opposed to like cyclical, like semi-secular inflationary cycle. And again, with like less globalization, weaker supply chains, less sufficient labor supply, and so on. I don't want to go into this because I'm not an expert on this thesis, and probably, I'm sure your viewers have seen it all, right?
Yeah, and it's not a thesis I agree with either. I don't think you do either. You tend to be a disinflationist overall.
Yeah, but that is like the second process. The third process is a very long secular demographic process, which is more likely deflationary. Like we're having significant slowdown in global population growth. We're having certain like aging populations, just those shifts which are like multi-generational shifts that are happening. And again, I don't want to go into that too much because I think this is the area where you are the expert. A lot of your writing.
I think people have heard it from me by now. So
yeah. So what I'm saying is like I don't want to tell you something that you know better than me, right?
Yeah.
There is a fourth process, which is current political process, which goes beyond what I described in process number 2, like fiscal dominance and shifts, like which had to do with current administration, tariffs, deglobalization, kind of like potential changes in world order. And it's very hard to say what it's going to do, but many people see it as inflationary. Some people see it as deflationary because it's just a slowdown of global growth. Some people think that it's just some shake-up and then business as usual. I probably put a little less weight on the current process than some other people do. Like, I do not believe in the end of US exceptionalism or kind of sell America spinning out. I think it's more of a hiccup rather than, I think this will all blow over, and then the real rates will start to bite and people will start again investing in America.
Yeah, I'm kind of the same opinion, and that it's more of a narrative than it is a reality.
Yeah, so, but how far this particular environment will go, we don't know, because we have close to 4 years of this presidency. We don't know what's going to happen in midterms. And again, this is not to support or criticize any of the individual politics. It's just more that this is a radically different political environment and somewhat different, very big change in trade policy for the United States. And you can again take a view of the more they exchange, the more they stay the same, right? Swing to the right, swing to the left, right? Or you can say like, wow, things are really different now. Because what happens is that some of the changes that occur don't even, it's kind of like what happens often in US politics. One administration proposes like a measure and other administration fights it like it's the Battle of Stalingrad. But then they lose, but then when they take over, they don't change it. It's like Obamacare, right?
I know.
Or the tariffs could be another example.
I think it's right. I think it's right.
So like suddenly they like first they fight it like to the last drop of blood, and then they're like, I guess we'll like it.
Yeah, so the game of politics.
So you don't know how like permanent the shifts are happening and how significant they are. Honestly, it's really hard for me. You just kind of have to be an observer, cautious observer of this. And keep those two theses in mind. Yes, it is something new, and yes, such things have happened before, and they kind of swing back and forward. And the fifth process that we might talk about more in the detail can't really avoid talking about it, is the singularity that is happening. An event one could argue the largest event in the history of the universe since the Big Bang is unfolding today.
Okay, well, let's get into this because the other macro stuff everyone talks about all day. This is the stuff that really interests.
So I'm happy to talk about this, but the warning is I'm again stepping out of the area of my expertise. I'm starting to be like science fiction writer, which I also do, but it's not like when you talk about real yields, bonds and cycles, like whatever, I can speak a little bit from my professional expertise.
But okay,
when you talk about
let me just
Singularity, I'm speculating.
Let me cover that bit quickly, and then we'll get into you and I just shooting the breeze about this other stuff, because it's interesting to us, very intellectually interesting, and it's a moment in time which I never thought we'd see. It's an incredible thing. But let's just quickly talk about rates. So real rates are too high. I agree. The dollar has been in free fall. Everything looks like we should have lower rates, but the long end has not come down, and rates themselves, the yield curves had a bear steepener. Does this change? Do we get rates falling in this cycle? I don't think we go to full recession. Doesn't really matter. We've got low growth and inflation is going to be falling for a while now because of the lagged effects anyway. When do rates fall? Why have they been so sticky? Even though inflation's not been that sticky. I mean, it's just come back down as normal.
Well, I think it's a liquidity argument, right? So first of all, like when you look at the, say, front-end Fed funds or SOFR futures, it's usually a pretty reasonable speculation by traders in terms of what the Fed will do next couple of meetings. And they usually priced relatively fairly according to the speculation. When you think about 20-year or 30-year bonds, it's an asset. And when they fall in price, it just means that there is more sellers than buyers. That has nothing to do, I don't believe in things like term premium, fair value for bonds. I think and look, it's 27 years in the markets. I still don't understand what term premium is. Everybody talks about it.
Nor do I.
Nobody can explain to me what it means.
Exactly.
I mean, I feel like term premium is what we decide it is.
Yeah.
Because there's too many unknown variables to calculate what it is. Do you see what I'm saying? Like,
oh yeah.
So all I know is like when I look at the price.
All I know is price in the end.
But yeah, this is the level at which they're buyers, and this is the level at which they're sellers. That's all I can say. And this is kind of, again, going back to buy low, sell high. You have to remember, we're in the markets. The price is at the level when buyers smash sellers, not at some mythical term premium equilibrium. So when there is more sellers and buyers, I'm just saying, okay, less liquidity, less people able to buy this asset, more people who need to sell this asset, and vulnerable assets get sold. And one of the things I was actually thinking about this last couple of days, that you have to understand, and I think what is happening is front-running the following event that is happening. So for better or for worse, the tariffs are designed to reduce current account deficit, right, in the United States. But what does it mean to reduce current account deficit? That means foreign countries will sell less stuff in the United States and get less dollars.
Yeah.
What does it mean? They will have less dollars to buy US assets with. So lower current account deficit inevitably leads to a lower capital account surplus, because it's an accounting equation. They have to be equal to each other. Dollars earned by foreign investors have to be invested somehow.
All things remaining equal would lead to higher rates.
So all rates are equal, it means to less buyers of US assets.
Yeah.
That could include long bonds, that could include stocks. Now it could be displaced by domestic buying. But I don't see how, so it is natural to kind of, what I feel that this recent move was a little bit of front running of this current account equation.
Yeah. And we don't know whether tariffs are really going to have an impact on the current account deficit, trade deficit, or anything. We don't know. It's speculation still.
We don't know, but it's harder to imagine that they won't, because the general rule is if you tax something, you get less of it. If you subsidize something, you get more of it. So again, if you tax imports, you'll get less of them. That seems to be fairly straightforward. So I don't see how introducing carrots could make current accounts worse. Let's put it like this.
So then, therefore, for them to allow the bond market to clear at reasonable prices, it's a matter of forcing the banking sector or the pension sector or the insurance sector to own more bonds.
Yeah, and the move already is being made towards that. This change in this, what is this called? This like exemption for
that's right,
regulatory
SLR or whatever.
Yeah, SLR, regulatory whatever leverage, supplementary leverage
ratio,
right? That is exactly. I've been long a proponent of the fact that there is really three-way besides quantitative easing and changing their federal funds target. Another way to ease or tighten is to change their banking regulations in general.
Yeah,
that's a very direct way to ease or tighten. So paradoxically, if the Fed wants ease for the government can ease by loosening.
I mean, I don't know if you've been following Basel IV, but Basel IV, which started getting implemented in Europe this year and the US by the summer, just starting, all it is basically forcing the banks to own yet more bonds, because all of these countries are having to issue more and more debt because of the aging population. So they have to stuff it somewhere, and they're going to stuff it in the bank balance sheets by making them hold more regulatory capital.
But honestly, there is also like, you can loosen banking regulation by allowing them to hold more government bonds, right? And not blowing their balance sheets by that, because if you don't penalize them for holding leverage positions and government bonds, right? That's the big point.
Yeah.
So, and honestly, look at the asset. I'm looking right now at the screen, and 38 tips are trading at 2.64 yield, 6.64 real yield. Yeah, you could tell me that, in 2000, somewhere in the year 2000, the real yield was like 4.4%. But I don't think those times are coming back, given this total. I know that's an argument that you often make, that total global size of global debt is so much that real rates people cannot afford the real rates so high anymore.
No, because debt as a percentage of GDP, once it gets through 100%, basically GDP just services all of the debt. So you just can't have high real rates.
Yeah. So if you're a bank and you can own an asset that yields 2.6% real, what do you have to lose? Or if you're a wealth manager, for that matter. So I feel people will come to buy them after this initial readjustment. And stock market is always like fickle, and who knows what it's worth. Like people always say, like, oh, stock market is overvalued, stock market is undervalued. This is all relative to historical averages. There is no actual way to value stock market. Over any long period of time, it's undervalued, right? Whenever you look back at long enough horizon, stock market was always undervalued, right?
At every point, yeah.
At every point of history, stock market was undervalued so far. And that'll probably remain the case.
But why don't people see that? It's a very simple thing. If the stock market's gone up all of the time, and then it's always historically been undervalued, but people just don't understand this.
Well, the thing is, even having said that, it still might be true that under certain conditions, when stock market is relatively overvalued, the expectation over the next decade of stock market might be, just based on historical pattern, the expectation might be diminished.
Yeah.
So there is nothing wrong with being short stock market if you believe that the expectation for the next 1 year, 2 year, or 5 years negative, right? Whatever your strategy is, whatever your way of valuation is, it just there are times on stock. What I think is the problem is that what I don't see why people are not basically not buying the big dips, right? Why people not buying in 2020 or 2008, 2009, that is the real big problem with most people having. Not owning it now, not owning it in 2018.
They seem to have, what I've noticed, Alex, is they seem to have an anchoring bias to 1929 and 1930, and they can't shake it. I had it in 2008. I thought there's going to be another leg lower. We're going to go down the kind of 80%. But most people anchor on that, which was a once in history event. And so every time it goes down, they still think it can halve again and halve again.
Yeah, I think like every time the stock market goes down, they create a narrative why things are going to be really bad for a long time.
Yes.
There is always a narrative explaining the current situation. And it is interesting. It's the same thing actually with bonds. There is a narrative right now, which I've been arguing with some people who actually respect a lot. There's a narrative that people will not be fooled again. They're not never gonna buy U.S. bonds at the zero real yield. And I say, like, watch them, and I keep saying, watch them do that in a couple of years. Like, people will once again convince themselves that there is a reason why now rates will be zero forever.
That's I think narratives are one of the most misunderstood things in macro.
Yeah.
I didn't really realize how these narrative shifts are so powerful. I try and step back and look at when the narrative is overly intense versus the reality of what price is saying. And as you said, like 2020, the narrative gets really bad. I think the narrative is overdone here and now. We'll wait and see. It's like the narrative over tariffs. Pretty much everything that comes like this never really amounts to anything bad for long. But yet everybody extrapolates. The world's changed. It's all broken. Nothing's going to work anymore. And they're so quick to do that. And that narrative feeds on itself because fear is a powerful narrative and people share it. It's weird.
Yeah. And then what happens is the narrative creates negative market sentiment, and you get negative reports. They reinforce your narrative, and it just becomes all like this loop. And typically what gets out of this loop is liquidity.
That's right.
Every negative narrative ends up with, this is the byline I said in my book, The Trades of March. Every crisis starts with fear and ends with necessity.
Very true.
So eventually people give you money and they have to go somewhere. So I feel, and what the paradox is, the only thing liquidity cannot solve is inflation.
That's right.
So the piece of puzzle that we don't know is inflation solved. Are we having actually deflationary past right now? Or we're having, because stagflation, it's a very difficult puzzle to solve because you cannot solve inflationary problem with liquidity. In some sense, you can with supply side liquidity.
Well, we saw that in 2022, right? So the market's going down. Normally, you would replace, and the economy's slowing down. Normally, you'd replace it with liquidity, but you can't because of inflation is high. So that is that conundrum, and it passed pretty quick, and eventually liquidity did come back and the market recovered. But you could see that period is very difficult to deal with.
Yeah, it was difficult. But what I came on understand, like 2022 was puzzling to me. What I can understand in retrospect is that because inflation was still so high in 2022, the real rates were still very negative. And that by itself was enough liquidity to carry a way out of that situation. Because the situation on the surface of it seemed very deflationary. We had rising rates, we had falling stock market, we had technical recession, all of those things confluence, right? Should be deflationary shock, right? Instead, that didn't happen. Or happened, if now, it would be with a huge delay, right? Even bigger than historical delay. And that's because the real rates were so negative that they in itself, liquidity was really there. When real rates are negative 5%, you have liquidity.
Very true.
So, but now we have long dated real rates over 2.5%. And that's not good liquidity.
No. Somehow it feels to me that liquidity needs to be injected directly into the bond market. Somehow it feels like there's a liquidity problem in the bond market that's stopping the usual buyers being able to buy.
Well, I think the change in banking regulation would be in effect injecting liquidity directly into the bond market. Yeah. But the Fed cutting rates is also injecting liquidity in the bond market.
Yeah, they've been dragging their heels. They're so slow. I mean, you can see the forward-looking inflation stuff is falling and growth is slow, yet Jay Powell doesn't want to cut rates yet.
Well, paradoxically, now they almost cannot, because there was so much political pressure on them to cut rates that they almost can't. It's like this stubborn, persevering child. When the parents tell them you have to go 40, and they were like, no, I don't need to go 40.
Yeah, true.
And I don't even know which side of this is being the stubborn child, by the way.
No, exactly. No, exactly. Maybe both.
No political statements here. I'm just saying that there is a little bit of that dynamics going on now, that how it seems like very logical, would be pretty logical for them to cut rates in May, but it doesn't seem like that's happening.
I don't know. Let's see how the economic data comes out. I feel like
it would be an outlier. It would have to be probably an outlier development of situation for them to cut rates this time. But it could happen, but it just seems to be slightly unlikely right now, because I feel like the credibility will be weakened if they do in their mind.
What's your favorite trade on the macro side currently? And obviously that can change over a week or several months or whatever it is. Is it tips or is it rates outright, or what's your favorite bet?
Well, I love long duration anywhere on the curve. I do have right now. I do like tips because they're just really underperformed, and they, especially long dated tips, and they really kind of cover all possible scenarios: high inflation, low inflation. It's a kind of trade that works in a broad range.
Yeah.
So in the interest rate world, long duration, but honestly, being long like red Eurodollar, See, I am so old. I'm saying still Eurodollars, SOFR futures, right?
I still can't get my head around SOFR futures. I just think of Eurodollars.
Like being long the reds, it seems to be not a bad trade, because I think there'll be more cuts than projected in the market.
The reds is which year or which?
Well, it's like 2026 kind of scenario.
Yeah.
Just think that the next 12 months, there will be more than 100 basis points of cuts.
Yeah, I
think
agree.
about this way, right? And then, and I do think that's the case. So there is a lot of space there for, you could get a pretty big deal if they cut to zero. That's like still 300 basis points to go.
And do you trade that via options, call spreads, or just straight outright?
Well, it depends on vol. You could do it outright. You could do option structures if you think vol is low. Recently, vol has come up, so it's harder to trade options. But if you could do it through spreads if you want to reduce the vol, but of course then you have a lot of bid offers. It's more like I don't have like a strong right now advice on this is how you should structure your trades to people, but I'm just saying something with this thematics is pretty good in the interest rate world.
Yep.
In the currency, but there are trades in other worlds. In the currency worlds, I think yen still has way to go in terms of appreciation relative to other currencies.
The yen appreciate.
Yen, yeah.
Yeah, I agree. I'm looking at the yuan yen chart, which I think is one of the most important charts in the world. And it's a beautiful head and shoulders top that suggests that the yen needs to strengthen and the yuan can weaken somewhat.
I definitely like both legs of that trade.
Yeah.
And there are some other currencies. So I did like in the currency world, I would not like so much bet on the dollar just itself, as I would look at various currencies which are very expensive and various currencies very cheap. Like, for example, Swiss franc is very expensive. Yen is still very cheap. Chinese currency is kind of hard to tell whether it's expensive or cheap, but given the interest rate differential and like policy divergence at the record, it seems like it could get cheaper.
Yeah, and it doesn't seem like they will allow it to cheapen against the dollar, but they really want it cheaper against the yen because the yen has been so weak and they're export competitors.
Right. And so it kind of like, it's probably not going to be like, it's hard to see if it'll be catastrophic devaluation, but this kind of grind of carry plus maybe slow depreciation probably is going to be happening in China. So there are, like what I'm saying, in currencies, there are pockets of things you can do, pockets of buying things which are cheap and selling things which are expensive, which seem to make a lot of sense in the long run. Again, I'm not going to be like super specific about, oh, you have to do all of this and options, but more like just, I think good themes are short, long yen. If you want to be long dollar, I would probably you could balance it with some hard assets, and hard assets have been doing really well. I mean, I really don't know how to puzzle the gold performance fully. I mean, of course, like it's easy to, even like various things that we discussed, to attach a narrative to gold, but I have to say gold my target on gold was 3,000. It a little bit surprised me by going to 3,400. I had like a 3,000 target on gold since like 2011, right?
I tell you what I found. I was just working with Julian Patel. I and we were shooting some ideas around because writing GMI, we found that, and had never realized this, that gold just follows with a month's lag financial conditions. And financial conditions leads liquidity, leads crypto, leads all of the other things. So gold is kind of living in current financial conditions. And we classify financial conditions as the dollar, rates, and oil.
So it's a dollar. So you're saying that financial conditions, looser financial conditions lead to higher gold?
Yes. And it's pretty decently highly correlated. It's obviously not.
But financial conditions are not terribly loose right now because of the higher rates and the fall in the stock market.
It's the dollar. No, forget the stock market. That's a lag. The one we use is just 3 variables. And it has the highest correlation, has a 97.5% correlation to the NASDAQ, all of these things. And it is the dollar, rates, and oil. Now, rates have come off a tad this year after going up a lot last year. The dollar has obviously had one of the fastest moves in the shortest period of time we've had in the last decade and a half. And that's really moved financial conditions. And oil obviously came down quite sharply as well. So financial conditions are loosening quickly. And gold seems to be just following that and has done for the last decade.
Well, I would be careful of there's not being what I call a tautological correlation. Because gold is clearly correlated to dollar because it's gold denominated in dollars. What I would like to look at gold and euros as correlated to dollar.
Yeah, so we looked at the correlation of them individually as factors, and we found combined was better than individually. So anyway, that's my current thinking is, and I'll write about it this weekend, is it's to do with financial conditions.
Or you can just say that there's more buyers than sellers.
That's true too.
But there was clearly more buyers and sellers of gold. What is interesting, gold mining stocks were doing well, but lagging gold performance. And silver is lagging, and platinum is really lagging.
Yeah.
And my experience with platinum and palladium is that you just have to be patient, and one way or another, platinum will go to 3,000 as well. But you have to be really, really patient. It's like a decade-long trade you're talking about. But those trades, however, do give adequate return on capital. If you bought palladium in 2003 at a couple of $100, you would have watched it go to like 3,000 almost 3,000 over the course of next, 15 years. And it would, I don't have like the exact years right now, and it would be a really good return on capital.
Yeah, the annualized return over time would have been fine.
Yeah, so this strategies of trading the platinum palladium complex have been yielding good results. You just have to be extremely patient. And silver, I think silver has space to go, obviously based on historical patterns. So, and cryptocurrencies obviously have space to go. I don't have like I'm not a very passionate about like hyper Bitcoinization or anything like this. It's more like just look at the historical charts. What are the range?
Do you trade it for the fund, or do you just hold it yourself?
I can trade it for the fund. Yes. Right. I don't like discussing my specific positions, but I definitely have the availability to trade it for the fund.
But you have the ability to, or you hold it yourself.
Yeah. So I have the ability, and I can express the pros and cons that I see on crypto as much as on gold or silver, right?
Yeah.
Like I can tell you the big picture of what I'm thinking about there. But what I'm saying is like being long dollar against something versus like China could be offset by, if you have the appropriate view, by being long hard assets.
And what about the commodity complex like copper, stuff like that, which is a trade that's on everybody's radar screen? And also, what about equities?
So for me, copper is an interesting trade because it's a trade like it's one of those trades that I'm fairly confident that if you go see through all the cycles, see 10 years forward, I think copper has much higher to go, because I don't think they will cancel electricity. And I don't know if they will have transmit all the electricity through microwaves. beams yet 10 years from now, but the need for electricity is increasing, and I think they probably will need copper. In the next upswing of the cycle, copper could go probably higher in price. And meanwhile, however, the counterflow is that if you do think of like China slowdown and global cycles cyclically, there could be some headwind to copper because it's an industrial metal, it has a strong industrial component.
So you'd rather buy low, sell high?
I'd rather buy low and sell high, yes.
And equities, any strong views here or not really?
I'm leaning negative on equities. I've been negative equities for a while now. Probably, I don't like being overly short stock market.
No,
it's a very thing
for
me.
We've all learned that lesson.
But you know what? However, I remember there was a convention, some kind of investor convention around 2018, I think, maybe like even before that big correction in 2018, right? And I remember I was giving some kind of presentation. I was in front of 100 people or whatever, 200 people, and asked them, hey, raise your hands if you think that within the next 5 years, you have better than 90% chance of buying stocks significantly cheaper than they are now. And almost every hand went up. And I was like, then why are you long?
True.
So what I feel like, on one hand, yes, in the very long run, stock market is always cheap. But what I don't know any exceptions to the rule that once stock market breaks out and makes a good run to the new at the money highs, like significant new at the money highs, then there will be a point in the future that you can buy it significantly cheaper. It's never like, so it goes through various, like if you just look from a chart perspective, it goes through various, like it breaks through barriers, it goes, rallies 30% more. Many people think that it cannot rally again, but it rallies 30% more. But at some point, it still goes back to test the previous breakout points. And it just happens every single time. And one time it's COVID, another time it's tariffs, another time it's global financial crisis, another time it's September 11th. It's always something. So I feel like the odds are not so much that I feel like stock market has to go down tomorrow, but I feel like the odds are skewed towards, I have felt that stock market being significantly lower at some point in the next 2 years. And every few years something happens. First of all, the rule is something happens. And this is what happened now. Now the whole tariff kerfuffle happens, right? That like a year ago, I wouldn't know what it is that is going to happen. But this is what happened now, and maybe this is it. Or maybe, but I think my intuition is that there's a good chance of seeing, like this winter, it was a strong view right now because there was you're still waiting for something to happen. Now that something happened, you're like, okay, now do I start buying the dips at 5,000 S&P? But maybe that's not really a dip yet. Now, when it goes to 3,200, that will be a dip. That's how kind of look at stock. However, I don't want to be too short because if you think about investor or money manager myself, the greatest opportunity lies not in timing to short stock market. The greatest opportunity for me historically lies in buying stock market in March 2009 and March 2020. And honestly, the reason I am successful is very much based on those things.
Even Stan Druckenmiller said the same. He's like, I've never really made money out of being short the market. But if I look back, I've basically made all of my money being long stocks.
Long stocks, long risk asset, like investing at the right times. Yeah. I mean, in some of the crises, sometimes it's a matter of luck because every crisis develops in very own unpredictable ways. And I think even in earlier masterclass, I talked to like in 2001, I was positioned well for it. In 2007, I had a lot of trouble. I thought I was well positioned for it. Turned out I wasn't. Because things didn't go exactly the way. And eventually, if all positions held, they would have been correct, but they were not correct for the beginning of GFC, right? In 2020, I was well positioned for that. Like when in 2022, when there was like the bond market collapse and the war in Europe, I was not necessarily well positioned for that. So with every new crisis, so this is a little bit of Russian roulette every crisis.
Yeah.
But what does make money, what is a very, or at least a very big portion of making money for investors, is having the courage to gradually become fully invested in beta at the bottoms. At the bottoms being not the person who is selling, but the person who is buying. And a lot of successful performance comes from that. So it's kind of like, if you have a crisis and it didn't go really well, but it didn't lose all your money and just kind of left standing, that's also okay. Because that's kind of what happened to me in 2007, 2008. Yes, it was kind of painful, but I was also a buyer of stocks throughout 2008 and 2009.
Yeah, I got that one wrong because I was doing the wrong thing. I was still bearish in March of 2009. I'd made money through the whole crisis and then gave a whole lot back by just being negative too long.
Yeah. Well, it depends on your style. There is nothing wrong with being like investors on the short side could be like as we decided before, there's no such thing as bad markets. They're only wrong bets, right?
That's right. That's right.
So like if you can be bad on short and making money, that's all the more power with you. I wrote a book about how it's easier to swim with the tide, but not everybody has to swim with the tide.
No.
It's a matter of personal preference. So I'm not going to judge because I've been plenty wrong, both throughout my career and recently, to like be judgy of like, oh, you should have known better on that year, because that would come to bite me pretty badly.
Yeah, exactly. Hubris never wins. So listen, let's move on. And I want to hear your thoughts about this singularity, because, you know, you have been not only a writer of science fiction, but a reader of science fiction. You've been thinking about a lot of these things, and now suddenly it all seems to be happening. Yeah. What is your mental framework for this right now? Because I don't think people get it yet, how big this is.
No, they don't. And paradoxically, even the most strong proponents of singularity, like people like Ray Kurzweil, they almost like moderate their speech because they cannot really spell out what are the real consequences of that, because you cannot easily spell it out because you'll be crazy. Now, when I was first introduced to the concept of singularity, it was almost 20 years ago. And since then, I've been thinking, like I read a couple of books, including by Ray Kurzweil and some other stuff around singularity, right? Maybe like 3 books or so on that subject, right? Back in the aughts, right? And I thought of it as a really cool idea. I definitely bought into the way of thinking, but bought in as like a speculative macro trader. Yeah, this might be a good trade, but it could go either way. Like, and it's always, this is one thing I also know, like it's, if you look at the asset performance in the past, you can derive a lot from looking at the graphs, but you never really feel the asset till you invested in it.
Yeah.
So like from that moment when I read this stuff, I started tracking this thing a little bit and thinking about this regularly. And so many people denied singularity. So many people, professionals in artificial intelligence, were saying like, oh, this is all bullshit. This is not going to happen. Trust me, trust me, trust me. I know all of this is all nonsense, right? Not in our time, in 200 years or whatever, right? I heard this so much. But what I've noticed, and this is what I've been steadily noticing, and those are not the words I'm saying now. This is the words I was saying 15 years ago. Of course, I could be lying now, but let's assume that I'm telling the truth, right? That the proponents of singularity as a theory were showing charts, graphs, math, calculations, while the opponents were just dismissing it offhand without any data.
Narrative only.
Yeah, and what I noticed is that data tracks the Ray Kurzweilian path of singularity. Everything has been tracking. And it's been tracking and continuing to track. And you could see like, okay, this is going a little slow, this is going a little faster. And then exactly as predicted, at some point, things started to go vertical. And this is now. And I know, and now I'm kind of already, to me, the debate is over. People who say like singularity is not happening, I'm just laughing them off. People who start saying about like, well, yeah, AI can do this, but cannot do that. It'll never be able to do this thing. I'm no longer having this argument. I'm not I don't believe
even the stupid
methodologies
argument about what is AGI and what's not AGI, and they keep shifting the goalposts.
exactly. And I'm no longer seriously engaging with people who think like AI cannot do something.
No.
Like, we cannot do that. AI cannot be caring, or AI cannot be creative, or AI cannot like write good poetry, or this or that. It's just, of course, people are entitled to their opinions, but this is no longer a matter of debate. I was willing to debate it a few years ago. I'm not willing to debate it anymore. I think it's just hilarious at this point. I just want to pat people on the head and say, "Oh, you're so cute. You think I cannot do this?" Well, maybe like for the next 3 months, it won't be able to do that. Okay.
I mean, I've never seen a technology increase in its power and abilities at this pace ever. I mean, don't forget, it went from using IQ as a measure, which is not a great measure, but it's a measure. Last year, IQ doubled, and now the latest model, the O3, has an IQ of 150, let's say.
Yeah.
Okay, so now it's very, very, very smart.
Yeah.
Now, if it doubles again next year, and it has been doubling every year, it'll be at 300. It'll be smarter than any human that's ever existed in history.
Yeah.
And then the next year, it'll be 600. And the next year, it'll be 12. And then it's like, it's beyond human comprehension. Very fast.
Well, this is where I want to talk about this, because IQ, this IQ, and this has a very interesting implication. What I want to say about the energy industry too.
Yeah.
So the growth, like I know that you have a lot of thesis of like exponential age, and I wanted to title is the end of exponential age. We've been in exponential age for a couple of 100 years. Now it's ended.
Right.
Because people a lot of think of exponential is just a lot. There's some people, mathematicians, exponential growth is a certain type of growth.
Yeah.
And it both has to accelerate and both come to an end. And I want to explain why. So can I go math? I don't know how you're doing with time. Can I go total math geek on you for the next 5 minutes?
You do it.
Let me unleash my math geekiness.
You do it. You got the PhD in maths. Go for it.
Yeah, so let's unleash it on the unsuspecting audience. A lot of stuff, so a lot of computation theory stuff and calculations based on iteration, that you do the procedure and repeat the procedure and repeat the procedure. So in math, the first level of iterating of a procedure is addition. +1, +1, +1, +1. Think of it as in terms of population growth. That's probably the easiest way to describe it. You have a family, and every 5 years they have a kid. That's like the one level of first operation. This is first level of operation, math addition. The next level of operation is multiplication, which is you have every family in the world have a kid in 5 years, and the world population gets multiplied by whatever, 0. Whatever, 1.5, 1.25, whatever, every certain period of time. Now, when you reiterate it over generations, you get what you call exponential growth. Now, we had this experience, exponential growth in population, even though it slowed down now. Notice that it's slowing down, that peak and slow down. We had exponential growth in GDP.
Yep.
And many other growths. We had exponential growth, for example, in speed of computation.
Yeah.
Now what I'm trying to explain is when it's driven by these factors, it's pretty stable, could be like 2% exponential growth for a long time. But now the factors changes. Now imagine, because computers, AI works very differently. Because up to this point, we had this paradigm. Every generation, certain family has certain amount of kids, and the population grows by a little bit. But now imagine that the world is interconnected, and not people just having kids, not with each other, but with every single person in the world. So this is not like 4 billion like 2 billion couples are having kids, but 4 quintillion couples having kids. But furthermore, it doesn't have to be in couples, because interconnectedness rises in complexity. It's actually 2 to the power of 4 billion possible combinations. Every subset of imagine that every subset of human population can create a family and have children. Now, imagine also that the amount of children they can have is growing also with the size of population. That is, yes, if population is 1 billion people, then you don't have one kid. But if a population is quintillion people, then you don't have quintillion children. And that is how AI, I'm not this is not science fiction. This is how AI actually works.
Yeah,
but now
I think of it as if most exponentials are Metcalfe's law, is how you look at them. This is Reed's law, which is Metcalfe's law.
Yeah, well, but this is way beyond the Metcalfe's law, because
because Reed's law is Metcalfe's law squared.
Yeah, but it's not squared. What I'm trying to say, it's a completely different thing, because what happens next is the amount of time it has to take children declines proportionally to the amount of people in the world. And that's true too, because each new generation of computation takes less time because it becomes. And then, so what happens is first you iterate multiplication to create exponentiation. Then you iterate exponentiation to create what the process called tetration, the powers of exponents. Then you iterated this to create puntation, hexation. And then you have but then what happens next? This is what people are missing. Then we move to a completely different paradigm, the paradigm which we cannot even conceive right now. What all of this that I described to you is still within a paradigm that we can conceive right now. But what happens in actual math, when you start doing this process, which is called fast-growing hierarchies, eventually they move to completely different, totally wild paradigms, which are just, you need to not only have, if you have PhD in mathematics in about 20 hours, you can understand what's happening, right? So how to get to numbers that big. And something's going to happen that we cannot even conceive of, because we are only using our very limited intelligence to conceive it compared to transcendent intelligence.
And this would be the move towards ASI, the artificial superintelligence.
Correct. And but as this happening, what we have to, those numbers, like fast-growing hierarchies, they cannot exist in real universe. Because within 2 seconds, you can move to surpassing the computational capacity of all multiverse, right? And there are quantum physics restrictions of what you can do. So what is the practical thinking about this? The practical thinking about this that energy might be a serious constraint to our growth. Right now, we're seeing the growth in energy consumption from data centers and computation, and it's very rapid. But I think when I'm talking about all this process to you, right? Can you imagine how much energy it would take to supply all this process? So what I
can we be a Kardashev level 1 society, or do we need to move to level 2, level 3? Is the sun enough? Elon's point is the sun is enough to power all of this.
I do not think that. Well, first of all, what I think is our energy demand will way outpace our technological capacity.
Right.
It's much easier to create artificial superintelligence than to dice on the sun to become level 2.
Yeah.
I was just talking about this with my friend who's a physicist. How do you dice on the sun? And the principal problems are so difficult.
Yeah.
You don't even know how to do that with superintelligence or without superintelligence. It's just not an easy project. Let's put it like this. However, so I can allow the possibility that in 20 or 30 years, our demand for computational capacity will surpass the energy output of the sun.
Which is staggering to think about, right?
But that's what people don't want to throw such statements, because that's where it creates crazy science fiction. But I think this is the direction we're going into. Which means that energy unavoidably, I don't see how energy will not become a bottleneck.
But at what point does it become the bottleneck? I mean, at universal scale or solar system scale, sure. But when do we get there? When does the multiplication of the numbers get us to a point where we can't use the energy that we can capture on Earth first?
Well, that's a good question, but
when do we get past a level 1, and can we keep up with that rate of growth in energy supply as the demand is required?
Well, it's almost I would almost look at this problem from the opposite direction. I would argue that energy has always been and will remain a bottleneck. Because if you think about this, a lot of energy costs, whichever they are, one of the major constraints of current global growth.
Yes.
If energy was free, maybe each of us would have. Well, I don't think everyone will have private planes, but you can imagine a very different paradigm, right? If energy was. Energy is a constraint, but it's just constraining different parts of life. What I think the question is not when energy will become a bottleneck, but will energy will bottleneck specifically for computation. And my guess is that, for example, thermonuclear energy will come sooner than people think because of AI, because AI is hungry. And when people, and it needs energy, it wants to eat, it will figure out to feed itself thermonuclear energy.
Yeah.
So, and all the problems that we're having with how to harness it will be solved, I think. But that's not an expert view. This is my science fiction hat on, right?
Yeah, but however, I can't believe it's directionally wrong that the AGI itself will solve its energy problems to the best of its abilities.
Correct. That's what I'm feeling. But however, just as humans solve their food problems and resource problems, to some extent, they improve their situations, but they never have sufficiency of the resources. They always fight over resources, always like ration them and argue them somehow. Same thing will happen with AGI. It will have to ration energy, fight for resources, and challenge them.
Is the fight going to be between, and there's two parts to this. One is, right now we've got all these different models. They're all being trained. They're all operating. They all use energy. So there's a competition amongst these new AI nation states that are rising. Okay, fine. But at some point, all of these models are cross-polluting themselves via the internet, which I can see happening. So they all become a supercluster of these things. Is there going to be a conflict between the AIs for this energy?
I don't know if there'll be a conflict, but I think there'll be a competition. I don't know if it will be a conflict or a competition.
But if they're smart enough, surely what they would do is try and kill their competitor.
Well, not all humans try to kill their competitors. We're just happy to, like, for example, if you have a store and there is another store across the street, majority of humans try not to go kill the person across the street, but just put them out of business is good enough, right?
True. So I think we also have wars for energy, which is...
We do. So I think just as in a human world and AI world, there will be good actors and bad actors.
Yeah, it makes sense.
So there will be people who compete for energy economically, and the people who resort to, and there will be not people, but agents, we'll say, who will resort to dirty tricks like viruses and sabotages and whatever, right?
And is it even remotely possible that fossil fuels can drive the next 10 years of this? Or are we really going to have to double down on every source of energy we can possibly find? I mean, how do we solve it? Let's assume that compute can keep going further than the energy allows. So that's the dragging factor that slows it down. What energy sources are we going to use? Where is the hyperscale here? Nuclear obviously is one.
Well, nuclear, I think we're going to have, solar is growing pretty well, but I think eventually it's not going to grow fast enough. I have mixed feelings on fossil fuels because I guess my science fiction writer's head says we're going to still need fossil fuels for quite a while yet, but eventually they're not even going to move the needle. So they're not even going to matter.
No, that's right. Because if you're, to complete that whole Kardashev scale civilization, it's a lot more than just the fossil fuels. It's kind of, we have to capture the entire energy of the sun.
Yeah, well, if you're talking about level 2, which again, no matter how powerfully I feel about Singularity and medical and computational field, again, I am not as optimistic about hard technology. Like, for example, robotics, I think robotics might lag a little bit. It's much easier to teach artificial intelligence to be a lawyer than to be a gardener.
Yeah.
But building a sphere around the sun or something like this, it's just and making it not cost more energy than it consumes. And what is this sphere? Just if you really think of what it should be made of, that it does not collapse out, so it doesn't collapse under the gravity of the sun. The technological problems, again, maybe I'm thinking with my limited human brain that ASI, it will say, will solve easily, but my limited human brain does not see even an inkling of a practical way how to get there.
So okay, we've got this limiting factor that may slow down the exponentiality or not even exponentiality, but even further rate of growth. What does it do to the economy? Because I think of it like an economic singularity, where we get to a point, and I don't think it's far away, where economies don't function in ways we understand anymore.
Yeah. Well, it is interesting. You've been talking about economic singularity recently, but I don't know if you know, I wrote an article orbiting economic singularity somewhere like in 2016 or 2017.
No.
You can look it up. There's an article called Orbiting Economic Singularity.
No way. I didn't know that at all.
And one of the things I got some pushback on people because I argued that it's one of the reasons to stay long stock market. And people were just kind of telling me that I'm just using bullshit to justify my overvalued positions. But excuse me, in terms of long stock market.
So what does happen to the economy and when does it start breaking apart in ways we don't?
Yeah, like a lot of things. Economic singularity is a very interesting thing. There's so many aspects to that. One of the factors like that, the job loss starting from higher paid jobs, not from lower paid jobs, as I noticed. Every time in the past, people comparing to previous technological shifts, but previous technological shifts took out jobs from, this is not new idea. Like that's been percolating now for a while, by the way. What I'm telling you is not my insight. Yeah. Like previous technological shifts will take out like the least desirable, the least paid jobs, right? And everybody else could take other jobs, and would actually create this way more wealth, more opportunities for people, and more new jobs would be created, right? But this time it's like the doctors and the lawyers are being taken out. So the high paid people are being taken out, and the gardeners still have their jobs.
That's right.
In the foreseeable future. That might be taken out by robots, but it doesn't seem to be like an immediate horizon.
No.
And then so what happens when people just don't have marketable skills anymore? Human beings don't have marketable skills anymore. There's like one aspect, like almost an inevitability of some sort of UBI and very different fiscal policy, very different societal structures. And on the other hand, again, this kind of energy rush, gold rush to energy, which will have to end up. What I see is some sort of like gold rush survival battle for the energy, and then some kind of stabilization, and actually somewhat of like explosive growth potentially, and then flatlining growth potentially when energy capacities will run out. And it will happen because I feel it like this software will run ahead of hardware, so to say. So we will get to so for example, when I said like we're going to get to thermonuclear energy, maybe sooner than people think, but probably not soon enough. Because to put it on big scale, it's just like, it's a long process, no matter how you look at it, with all the regulations and politics. And even if tomorrow they have a thermonuclear reactor that can viable, it's still like a decade before it's going to make a difference, right? So I feel like there'll be those slowdown periods when it'll be like, wait, how do we...
So as opposed to being liquidity as the constraint on the system, which is the framework that you and I have used for many years in macro, it becomes energy as constraint on the system.
Yes, that's what I'm thinking, that might become the case. Because liquidity, in the end, central banks have proven that they will provide it.
And we don't have the ability to keep growing the economy by increasing energy output fast enough.
Yeah, that's what I see. And paradoxically,
I'm just mentally getting the image. So we get the ramp up as all of this happens, and the investment piles in, and we get the ramp up in the usage of energy, but eventually it stops growth because growth is a rate of change. And if you've got no energy to create the rate of change, everything slows down until we catch up.
Yes. That's kind of what I paradoxically see. I paradoxically see that at the end of exponential age, through the super exponential burst in computation, and then everything kind of having to slow down.
Fascinating, because I've thought that after 2030 or so, things get complicated, and I was kind of imagining that we will probably be in a bubble all the way through until that, with some cyclicality, of sure. And in my mind, and I didn't know why, I had this idea that we would flatline for a while. Whether it was because the markets were being run by AGI and therefore they become just cyclical. But your thesis really plays into that, because it's about by 2030 where we'll start hitting these constraints, because we just can't build it fast enough versus the speed that this stuff is scaling.
Yeah, it could happen. Well, again, it could happen by 2030. It could take 10 years. It could take 20 years, or it could take 2 years. It's like really hard to predict because we don't really know everything that's going in AGI, right? Because what we see is just the tip of the icebergs. What we see is what Google is doing. What we see, we see the Geminis, the ChatGPTs, the Groks of the world. Those are all open source things, not the open sourcey things, which are kind of being showed to the world and free or cheap. Now, I would be very surprised if and I don't have any inside information telling you about this right now, but I'll be very surprised if major hedge funds are not working on serious AIs to bolster the investment process, right?
Yeah, because we think Renaissance Capital had it for a while, right? In some way, shape, or form.
Well, yeah, but they did not have the capacity to. There were various AI systems, but in another LLM didn't really exist. But now that LLM exists, who knows what people are doing with it, right? And they are definitely not publishing their results. Now, who knows what the governments are doing with respect to military, right? Again, they're probably not publishing the results. So the stuff that it might be going under the surface there could be staggering. And when the stuff starts yielding results, there is this joke about, there was this Douglas Adams novel in which there was this girl who she kept reciting the stock ticker in her head, but she was reciting, she was sitting wherever she was, she had this psychic power to recite the stock ticker, but she was reciting the current stock ticker, and nobody really wanted to spend any time funding the research on this girl. But somebody said, if she starts reciting tomorrow's stock ticker, we'll have no trouble funding this research.
Yeah, exactly right.
So this is one of those things. As these things become more and more efficient, they'll start sucking more and more.
So, look, the knowledge is being disrupted, particularly the more expensive knowledge. So the high-end margin of knowledge is lawyers, accountants, and it's also hedge fund managers. How are you thinking through this, right? If you prove to be good with your knowledge, you capture a large premium versus the energy that you use as a human, and AI is going to disrupt that.
Okay, so this is a very good question because I was really seriously thinking about this, and this was kind of like a seeing a therapist level identity crisis.
Yes.
For hedge fund.
So Alex, just to explain, yesterday, on Friday, the new O3 model came out with a deep reasoning. It is ludicrous. It does probabilistic future analysis of macro.
Yeah.
And it will break down all of its logic and why it got there with references. And I'm like, okay, we really are 6 months away from nobody ever needing me. You just need to ask the right question. And I'm like, we are 6 months away from it being able to run a macro portfolio brilliantly. Yes, there'll always be some person who's better, but it's starting to shock me. And I knew this is coming. I've been talking about it for a long time, but now I'm seeing it. I'm like, holy shit. I mean, this is better than 99% of all economists and market strategists that I know of.
Well, so here is here's what I came to thinking. And this is a big identity crisis for people like you and me, because I grew up and very part of my identities. This is what I'm good at. This is who I am more than I don't think of myself like my identity by maybe because I'm of a privileged class or whatever, but I don't think of my identity as I'm a person of certain gender. I'm a parent, or I'm this, or I'm that. First and foremost, I'm a person who has certain strategic skills, right? That's my answer to the question of who I am, right? And if that gets negated, then I still have many things left in my life, but that's a very big, important part of it. And it's also implication for investment. But one of the things that is important is imagine what happens when AGI takes over running hedge funds, and everybody gets convinced that they're better than managers, an infinite amount of capital runs to those hedge funds. Every market price will start rapidly going to the balance.
Yeah, that's my theory. Is where is the imbalances if the AGI is in charge of market?
Well, yeah, so there will be a huge market shock, right? And they will adjust for the fact that there will be gyration as you approach the shock. It's like when you're crashing into a black hole, you actually can come out on the other side, right? So you can crush through the prices that are reasonable prices and go through them, right? So, but what I'm saying is that if you right now a macro manager and you can identify significant long horizon imbalances, the advantage of it is that you can get payoffs much sooner than you would have otherwise when AI takes over, because your positions will still be valid. If your positions are valid and AI will come and validate them, the reallocation of capital can very quickly move them in your favor.
But
So it is actually a good time to
the death of, we talked a lot about narratives and false narratives and narratives that create reflexivity. Surely there are no narratives in an AGI investing world. And so a lot of how we think about market sentiment analysis, none of it matters.
It might not. It might be, but they can be like the agents can create their own kind of society around this, and they will be trying to guess what the other ones are doing and trying to front run them and game it, and they'll use all sorts of game theoretical methodologies, because even if they see like the balance price is better than we do, the biggest problem, what constrains macro trading, it's not our ability to identify value. It's like our ability to manage risk and manage liquidity. Because it's not really, you don't have to be a genius as a macro trader to identify there are a few trades that in the long run make sense economically. Even though people will disagree on many things, but there's a lot of trades that people say like, oh yeah, if you hold this thing over 20 years, it makes money and everything.
Okay, Alex, well then let's go back to another thing you said, is the stock market is always underpriced over time, right? Well, surely an AGI will realize that, calculate the expected future returns and just ramp it to there now.
Exactly, but then another AGI will calculate that this AGI is over-leveraged and squeeze them out.
They're just playing the same games that we play with each other.
Yes, they're just going to play them at a higher level, I think, because they'll have the same problems. They'll still have to deal with leverage and liquidity.
Yeah, they just don't need to deal with emotion, I don't think. Maybe they do.
They won't have to deal with emotion, but they will have their own like tidal effects of like how they interact with each other, how they affect with each other, how, again, it's hard to predict. The paradigms could be different, but there would be various feedback loops could still happen. They're like all the game theoretical things, like I know that she knows that she's going to do this and then I'm going to do that. It's just going to be in much more complex levels, but they still will mess with each other, just probably in a less emotional way. But that whole thing of like calculating what are the chances that this other AI is over leveraged, and if we push the price down, they're going to force them to sell and buy it cheaper, right? And the other AI will throw out all sorts of false flags and pretend to be short when they're long and whatever.
All I do know is, we've skirted around it really, but what is about to happen is of civilizational importance. The scale of what happens when you bring in infinite human knowledge or infinite knowledge with infinite physical labor, the robots, is something we will never and can never understand.
Yeah.
And what it's going to do to our economies, what it does to the world, what it does to the universe, what is the universe? There's a lot of people, and I've spent a lot of time on this, thinking that the universe, the fundamental principle of the universe is not space-time, but consciousness. And that seems to be coming to the forefront as people understand more about AI. We're just going to go through a really strange period where all of the stuff you read through in science fiction becomes hyperstition, i.e. it kind of happens. And we're seeing that everywhere.
And in many aspects, we're already leaving a lot of science fiction behind. Like a lot of stuff which some science fiction presuppose could not happen is already happening.
Yeah. And you can already see people talking about ASI and saying, yeah, but that's going to be another 50 years away. And I'm like,
3.
Yeah, AGI, I think, is here. ASI, if it's 3 or 6 or whatever, then you might hit the energy constraint that it will need to solve because it will be the super creature. But people are wildly underestimating the speed of this, as you said at the beginning.
Yeah, it's a very wild, and it's very difficult as a manager, money manager, to keep like, you have to be very thoughtful about this and think there are still cycles, there are still considerations that we're used to, there's still all the procedures that we're used to. And then you think 2 years ahead and ahead, and you don't know if it's be business as usual or will all be some kind of ball of energy spreading around across the universe, right?
One thing I do know is that very soon this is a deflationary nuclear bomb. This is the single most deflationary thing ever to happen. And
I would agree with this. It does appear to be that way.
yeah, and that will play out when that starts, when people really realize how deflationary it is, when every lawyers charge $600 an hour and it goes to $29 a month or $20 a month. I mean, that's insane deflation at the most premium part of the economy. So we got all this fun to be had. Listen, I've got to jump, but as ever, a fabulous conversation. We need to do this over a glass of wine because it's several hours.
Yeah, I would like to
down this rabbit
I hope
hole.
that we'll have a chance to meet more socially and just have a chat about life.
Yeah, absolutely. I look forward to it. Anyway, thank you for coming back to Real Vision. I really appreciate it.
I think it was a pleasure.
So, a great conversation with Alex, as ever. I think we have some differences. He seems more thinking towards a recession is coming now. I don't think that'll be the case. In fact, I don't think we have recessions again for a while, just because of how the Federal Reserve use liquidity to remove risks from the economy. But either way, growth slowdowns, that kind of stuff. We have some differences. We have similarities. We're both disinflationists. We both think that the trends going forward is lower inflation. We're both looking at the bond market thinking, there's probably opportunities there. I might look at how that drives other assets. He might trade bonds directly. But overall, fantastic conversation. Then going into the future, there's many schools of thought about how this plays out with AI. And Alex and I really dug into that idea that energy is the constraint. Now, we're also talked about the fact that AI, AGI and ASI will obviously solve its own energy problems as well. But he's not sure that we can get there because of the law of big maths. I don't know about that. And obviously Alex doesn't either. We're just trying to think about it, think it through. What could slow this down? What could change the trajectory? All we know is up until a while, this will continue. And that trend is one of the biggest things we have ever seen. And in the end, it is the biggest thing humanity will have ever lived through. Anyway, exciting times. What a time to be alive. I'll see you next time.
Hey, thanks for sticking around to the end. Look, if you enjoyed it, hit the subscribe button and check out the video here on the right-hand side. I'm sure you'll enjoy that one as well. And if you're ready for more, go to realvision.com/join. I'll see you there.